Like GDX hasn't. It was only around since 2006. So take something that's been around a while. An XAU index, if you divided the price of XAU, which is the Philadelphia Gold and Silver Miners Index, by the way,
Mhm.
and divided into 1 ounce of gold, you'd see that from 1980s, 90s, up through 2008, so for several decades, its average valuation divided into gold was 25%. It was always worth 25% of an ounce of gold, one share of
Mhm.
XAU. Okay. Sometimes it was 35%, and it had lows like in the 17, 18%. But on average, during that multi-decade period, 25%, let's call it average valuation. You know where it collapsed to in 2015?
Tell me.
4%. I mean, what do you think? It's going to be free? Okay.
Right?
They're the people that get it out of the ground. And they were worth 25% on average. And now, then 2015, 4%? Give me a
Hmm.
break. Okay, right now they're worth like 7.5 to 8%. Okay. By our metrics, XAU versus gold spread chart and Huey versus gold have both emerged enough in recent months to break out of the basing pattern that they had since 2015, indicating, hey, we're alive. We want to go to a normal valuation to that which we dig it out of the ground. Okay. Well, heck, even the bottom end of that multi-decade range of relative value of XAU to gold was 17.5, 18%. Well, right now, that's more than a double in their relative value just to get to the bottom
Right.
of the prior multi-decade valuation zone.
Yeah.
Doubling in value. Meaning, if over the next 6 months or a year we see gold go up to, some minimum high like 8,000, which by the way, JP Morgan has now come up and said 9,000 2 months ago as an
Hmm.
ultimate. We think 8,000 is ridiculously cheap still because that just matches the two prior bull markets that occurred in the last 50 years. There were eightfold moves. Ours is right now at, let's call it, we started from 1,050. You do the math. 8,000 would match those moves. Okay. Merely match them. But if you took gold to 8,000 and doubled the value of the XAU index from where it is now, it would be like a tripling in the price of XAU.
Hmm.
So
What
we
about that?
think we think the potential for silver to gain versus gold, which is still very cheap versus gold historically, and miners versus gold is enormous.
Hmm.
So yes, watch the mama market, gold, but the children are about to surge in front, okay, or the puppies, whatever you want to call them. They're about to regain value as we on the spreads and also versus the stock market.
Yeah.
So silver versus gold, gold miners versus gold, silver versus the stock market, they're all cheap and they all indicate new trend direction, meaning silver's going to beat gold. Silver's going to
Hmm.
beat the stock market. Gold's going to beat the stock. And it just began in
Yeah.
terms of the valuation technicals.
Yeah.
So even though we're not going to offer a new primary entry point, okay, based on long-term metrics, all our long-term stuff is fully positive. It was
Hmm.
positive over the last 2 years. We're just going to try to help people stay in at this point. But I think a lot of monetary things in the world, fundamental, are going to change, especially when the stock market starts to break in a way that hurts, in a way that you get a headline, no longer is it a regional bank, but oh my gosh, a big bank has a problem.
Yeah.
That's all you need to hear to totally turn the tables over
Yeah.
and put fuel into the monetary metals.
Curious about investing in gold and silver, but feeling confused due to ongoing global uncertainties? This ebook is specially designed for new investors who feel unsure about investing in gold and silver trading. It breaks down strategies in a simple, practical way, helping you make informed decisions and invest in the right direction. Over 100 people have already taken the first step with this ebook, and today they're living proof that smart investing can change lives. Start investing fearlessly, wisely, and with a clear strategy. Hurry! Visit the link in the description to get your copy today. The stock market is starting to look dangerously similar to past major tops, like we saw in 2000 and again in 2007. History doesn't repeat exactly, but it often rhymes, and right now the signals are hard to ignore. When this overextended market finally breaks, the Federal Reserve is likely to respond the only way it knows how, by printing massive amounts of money. Liquidity will flood the system like never before, and that's when real assets begin to shine. Gold, silver, and mining stocks already started moving. Back in November, they broke out of long-term 10-year basis, something that typically signals the beginning of a major bull cycle, not the end. And silver, in particular, still looks incredibly undervalued compared to gold. Right now, it's sitting at around 1.5% of gold's price. But if you look back at 2011, that ratio was above 3%. That tells you there's significant upside potential still ahead. Even if we see short-term pullbacks, those are likely just healthy corrections within a much larger upward trend. Looking forward, if gold pushes toward $5,300 and silver breaks past $90, that's when the next explosive phase could begin. From there, silver moving toward $300 to $500 doesn't sound extreme. It starts to look like a natural progression in a powerful bull market. The real move hasn't even started yet.
No, absolutely. We thought that breakout in November, by the way, on these spread charts, relative performance, is our final buy signal for gold now and silver and the miners. We put out long-term buy signals in 2024, March, April of 2024. At that point, silver, for example, was pushing up toward 26. Okay. And the gold and miners were much lower levels than they are now. We put out another buy signal in June of 25. And we're talking silver especially here. And November of last year was our final major last point of entry. Okay. So if you're joining now, you're late. We're not going to offer major entry points now. We'll offer short-term entry points. But the big signals have already been rendered, this being the last one that you're looking at there. So the issue is, okay, what are we expecting out of this big shift?
Yeah.
And we're expecting a explosive acceleration move in the whole complex.
I agree.
But we've been arguing all along that somewhere in the middle of this clock, and we think the clock is like a couple quarters, meaning starting December, so early summer, let's say, much of the dramatic part of the price move should occur.
Do like, share, comment, and subscribe to this channel. Also, don't forget to hit the bell icon for more updates.